So let's talk about the market technicals and see where we are headed, because right now we've not managed to conquer that 50-day moving average, which is 17,490. We're hovering around that level, but we're not able to break past it conclusively. Dharmesh Shah, the Assistant VP at ICICI Securities, is now with us on the show. Dharmesh, how much of a resistance level is this 50 DMA at 17,490 thereabout, which is where the markets are hovering? And what's the trade that you would recommend?
Yeah. Good afternoon, Reema. Yes, definitely I think so. The market seems to be facing some bit of a resistance around the upper band of the channel, which is around 17,500. But we believe, I think so, the bullish stance still remains to be intact. I think so. Any dip towards 17,300, 350 should be looked as a buying opportunity, because eventually we expect, I think so, market to eventually gradually take past the level of 17,500, and we should be heading towards 18,000 level the coming week. So overall, I think so the outlook remains to be the positive. If you look at the market, after all this negative news globally, we have been maintaining the 200-day moving average. So all negative news seems to be getting priced in. We believe any fall or any dip in profit booking towards 17,300, 350 should be looked as a buying opportunity for target of 18,000 in the coming weeks. So
don't get that dip, Dharmesh. What if you don't get that dip towards levels of 17,300? At this juncture, currently, for all our viewers who are watching you, is there a trade on the Nifty right now or on the Nifty Bank?
Yeah, if you look from the intraday perspective, definitely around 17,440, 450 is a good level. After 230 we see and some bit of a minor profit booking should be looked as a buying opportunity. So around 430, 460 is a good level to re-enter into Nifty 50 from the Nifty futures perspective. Yes, definitely 530, 540 should be the immediate target for the Nifty going forward. So even after, I believe, I think after 3 o'clock, if we maintain 17,480, 490 levels, we could see more of a short covering in the Nifty in last half an hour of the session. So I think so, yeah, definitely I think so around 460, 480 is a good level to re-enter.
Okay, all right. In that case, what would your individual technical picks be?
Yeah, so on the mid-cap side, we remain to be positive for the PSU banks as a whole. As if you look at the PSU index banking, has witnessed a breakout of the last 4 years channel breakout. So falling channel breakout indicating, I think, the structural change is happening in the PSU banks. Definitely, we have seen a good catch-up exercise in most of these large caps like State Bank of India, Canara Bank. We believe the catch-up exercise should begin in the second run of bank, mid-cap banks, where Union Banks remains to be our top pick. The stock seems to be witnessing a flag breakout, and if you look at the pattern since 2020 to 22, I think so it's a purely a cup and handles type formation in the Union Bank. So I believe, I think so the major negative news seems to be getting priced in Union Bank. With strong volumes, we expect the stock to head towards 52, keeping a stop loss of 39. Second stocks where we remain to be positive is Bharat Forge. So Bharat Forge is a, if you look at the auto ancillary, it has been the clearly outperformer in last corrective phase. And Bharat Forge is a good proxy to a Class 8, US Class 8 trucks and more of a defense space. I would believe, I think so for Bharat Forge, a strong buying demand most of the times have emerged around the 52-week EMA. We expect the stock to head towards CY21 high, which was at 850, keeping a stop loss of 734. So Bharat Forge and Union Bank on the mid-cap side remains to be a top.
Thank you very much for that. Those were a few ideas. Let's talk about mid-cap movers. Vivek is here to